Hi, everyone. Hopefully you can all hear me and see me. Would love to know if you can. Just let me know. Yeah, awesome. Awesome. All right, so we've got a very interesting week ahead of us. I want to talk a little bit about what happened last week and tell you the lines that I've drawn, what's pretty important. For me and what I'll be looking at. If we take a look at how the broad market has rotated over, we've had a shift from um, energy, which was pretty solid for about, 2 months. And now we are rotating back into a space where technology and utilities that are really driven by the AI race are moving up. This past week, we had basic materials down. I think that was a little bit of mean reversion. Um, we had healthcare down, and I think that's drug a lot by United Healthcare and what our health secretary is trying to do. A lot of things that are pretty important for us to think about there. And then energy pulled back quite a bit, so we're going to be looking at a few of those things as we set up into the market space. On Friday, we had this big push into utilities, again, AI driven energy, which I find to be very interesting. Real estate, which we think if the new Fed chair gets in, he'll be more compliant with what the current administration wants. And so all of a sudden, we started the rotation back into basic materials after a pretty big dip the week before. So we've got a market that looks a little uncertain to me. The futures are a little bit down right now. The S&P futures look like we're going to gap down at about 62.96. The NASDAQ futures look to be gapping up, and yields also look to be gapping up while crude is gapping down. So let's try to prep and see if we can find ourselves a couple of really nice trades after the market begins. Let me share with you the important things that I look at. As many of you know, here we're staring down the E-mini S&P, and I like to look in the past 3 to 4 days and say, okay, where is the biggest volume candlestick and what does that look like? Now, if you want to get your charts a little bit muddier, you can draw Fibonacci that goes from the bottom to the top, and you can also draw a Fibonacci that goes from the top to the bottom so that you can see where price action is rotating right now. The big thing as we get closer and closer to the VIP starting, I'm super jazzed about that. The closer and closer we get to that, the most important thing for me to think about is how do we get traders not only passing a combine, but getting through an XFA and getting into live. Now, most of us are just looking to pass a combine or indeed get to an XFA where we can take a payout. But the big thing that we often don't focus on is risk control and what things might look like in general. So what we're going to stare down is the broad market. These are hourly charts. I like looking at the hourly candlesticks, but we're going to flip them to the 15-minute candlesticks in just a little bit. But I want you to see that the price action has really been in a very big range. So a lot of times when we're trading intraday, we actually get caught in the noise of the market instead of the rotation breakout where we can aggressively move to the north or aggressively move to the south. Otherwise, our Dolby trade is the best trade for us. And then understanding, well, wait a second, where might wicks come in if we are looking long or if we are looking short? So my goal today is twofold. One, it's can we make sure that we are looking at the market from a wide angle first? Two, see where risk events are likely to occur. And by risk events, I mean liquidation breaks to the north, liquidation breaks to the south. And what that means is all the buying pulls away from the floor of support. And so we get this really sharp downward motion, or all the selling moves away from the top and we get an explosion to the north. And so what we'll notice over the last couple of days is that we've done a fair bit of that. We've had a lot of wicks move to the north, a lot of wicks move to the south, and then recovery. So let's just talk about that. Here, I've anchored a VWAP. Now, my anchored VWAP is open, high, low, close divided by 4. But if I just did the close, it just moves it by a little bit. And so if we decide on one or the other, remember this: lines in the sand from traders can always get broken. Absolutely always get broken. And so your thought should be, if this gets broken and it comes into the next line of support, what do I need to do? So one of our Topstep traders on the TopstepX platform, I talk with quite a lot. Her name's Marcia. And she said, I love what you do with implied volatility, but what I did was map it out for the whole week so that I can see if we explode over the implied vol, we get to move. So if you guys want a snapshot of this, I absolutely will put it. Go to the Discord. I'll put a snapshot of each of the ones that I've got in there. Go to the Coach Anne-Marie channel, and you'll see where the implied volatility before the open sits in the chart today. Now, it's showing that we've got a pretty good gap down that may or may not hold. We'll see how that goes in terms of how it starts, but we've had a little bit of noise over the weekend. EU saying, hey, listen, we're going to get more aggressive with how we respond to tariffs. Nobody really wants to play fair. Everybody wants to sort of fight about what's best for them. Okay? And so you can't blame countries for that. They want to know, hey, what's best for me? That's what we do with our house. That's what we do with our families. That's what we do with everything. So everybody's trying to get what they want for the most. And so it doesn't matter where you stand on the horizon. As I've always said, if you have a problem with what's going on, get on the phone with your congressman. Do not argue about it on Twitter or X. You're going to do nothing but give yourself a headache. So there we go. Monday's implied volatility low, 63.14. Implied volatility high, 63.56. Of course, these are measured. What does the market price in from an options chain that gives us the rise of motion? Obviously, we can see dips or buy zones because we are making higher lows and higher highs. The question is, are we sitting in an environment where we can wick high and then fade into a range, or wick low and bounce into a range? And of course, that's what we're staring down. So that's the first thing. Second thing we've got our VWAP, and I think for here tonight, what I'm going to do is make this a little bit sharper so that we can actually see where these lines are in the space, and we can go from there. So if you're staring down trend and you go, hey, follow trend, you're going to see a high, a low, a lower high, a lower low. And so your thought might be, I'm going to take the short at the VWAP. Well, your old high is going to be the resistance zone, and so that's the place you're going to have to manage your risk. Can I stay alive during this wick breakout, and do I know where to just cut and run? That's super important. I like trend to help me with the VWAP because it's an important way that tells us, hey, this is what volume is doing, this is what price is doing. The other indicator I want to add for us is volume pro. Is this it? Yeah. Or is this going to give it to me? Yeah. Maybe it'll pop up shortly. All right. So there we have it. We can see dips or buy zones. We're back down in the range. Here is the biggest volatility candlestick. It's got the widest range. And so the 1.5 area is at 63.23 coming into the open. We've had a series of candlesticks into the close of Friday that are higher lows and higher highs in a bigger frame of reference that's sitting that says old resistance is likely to be, old support is likely to be new resistance. So in my mind, I would be looking for a potential short action event that is round and about this area, but my risk is going to have to be pretty high, right? Especially if I'm trading in ES, which is what I'm looking at. I prefer to use the ES markers because those are going to give me the better settings because more volume is tracking in there. Next thing we can see is that as we're lifting, we've got lower momentum. And so we're coming into the last week of July that has a tendency to give back some of the movements that the first weeks of July normally put in place. But as you can see, if we move backwards, I mean, essentially, our month of July begins right around this base action here. So we've had a pretty good run with dips being buy zones. The number one thing, again, for the trader to recognize is that price action is going to follow general trend. And if you look at your dome, you'll be able to see where a lot of those orders are piling up, but you can also see it just by staring down price. You really can. It's that simple. And so what I want to focus on is this price action perspective as we hop into the space. I want to show you the NQ also. I've done the numbers for the NQ for every single day. They're mapped out here with the red lines that we can see on the side. So that's giving us, the NQ looks exactly the same. Overall, higher lows. And what we've had is a reversion to the mean. And let's do the same thing. Let's draw this Fibonacci. And we'll draw it from top. Oops. We'll draw it from bottom to top so we can see the range expansion. Interesting. It has not pulled back as much as the ES. The ES pulled back to old resistance, new support. This hasn't happened here. So anchored VWAP showing upside motion. Regular VWAP up to sideways. And so we're sitting here waiting. I did not do these numbers for the YM because they don't, the option chains don't show them quite like that. But our goal is to see, can we hold up over the edge to move forward? So, can I talk about the indicators? All I use is the regular VWAP and an anchored VWAP. And then down here, you might be going, what's all this about? I just use a stochastic RSI, but I've got these, instead of just having a line, I've got it as a step line with diamonds. The inputs for the stochastic RSI, 14, a smooth of 2 for K, a smooth of 5 for D, and that's it, right? The goal is just to look and see what trend is like and see if there's relative motion. All right, so here we go. Let's go to the 15-minute and let's go to the ES because I find it easier to trade on Sunday nights. And we can see it gapping down in a 15-minute formation. But the question is it giving us a tradable area where all we can see are buyers? And the answer is no, because we have sellers here and we have buyers here. And so there's a big fight in this area. But what we do notice is that in general, the buyers have come in at around the 63.25 area with the stop not far below. So if my trend, if I'm being supported by my VWAP here, and my trend is generally up, and I'm having rotation, my thought is I'm going to wait for this heavy congestion. I can see what the risk is like, so it'll make for the small trade, and I'm going to take it long there. Your question might be, Anne-Marie, why not just go short? Well, because I don't know who's doing what. Buyers here, sellers here, sellers here, buyers here, sellers here, I can't tell. But what I do know is down here, everybody was buying. So that's going to be my lowest risk, highest reward event. Now, what happens sometimes when we look at something like this and we go, ooh, here's my trade? It either never comes there or it breaches below. Now, my thought is if it breaches below, I'm okay until about 63.21 or so, right? So I'm going to put a stop sell here, right? Just in case it just rockets through. Or I'm going to end up buying here. But again, until this area firms up as new buying pressure, I have no guarantee of likelihood that it's going to rotate in that general direction to the upside. All right, so we're starting to build overnight inventory. I think the buy is there. Could it come all the way to the anchored VWAP? Yes, but I'm willing to buy one here and let it rotate up, at which point I would sell at old resistance. This is essentially where everybody has been selling with the exception of this one blast to the upside, and then they're gone again. And so this is going to be my line in the sand, 63.39. So for any of us that have been working together, what we notice is that last week, this 63.39 area, a very, very big deal. It's been a very big deal. So that's important for us to realize. That's a big number. So this is how I would frame it out. Show me where on my 15-minute chart I've seen buyers, buyers, buyers. And if it holds, because I'm being supported by my anchored VWAP trending above, I'm going to get my price action event to the north. If it doesn't, I've got a 4-point stop, and that's okay for me, right? So I'm waiting for that. If you want to trade this short, my thought would be the following. You see this accumulation of price action right here on Friday. This is a mini inventory event where everybody bought here or everybody sold here, and they came right back into their frame. It's broken that edge, and so now they're going to work through into the next area of support, potentially, which is somewhere around 63.29 to 63.33, where the old support is. So I'm going to give it a chance, let them wiggle, let them see if it can break down, and I'm comfortable with that. I'm okay with waiting for 5 or 6 points to come back. Let's take a look at the NQ and see what we can build from that space. Let's look at the bigger picture and see if we can confirm price action. All the way over here, we've got a double top formation on a 15-minute chart. And we've got a bottoming formation here that's got a pretty big group of wicks. Now, I would rather see if it could break the wicks, run the stops, and then come into the support zone. So I'm going to wait for it. I'm so excited about alerts coming. I'm going to wait for price action to hit this level. And I'm going to come back to the chart and say, you know what? That's where I'm going to buy. Now, some of us love trading trend lines. I'm terrible at trading trend lines because I don't draw them very well. But you can see buyers, 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 higher lows all over the place. Now, the question might be, is this a bear flag? So what is a bear flag? A bear flag is, let's see what we get here. Wow. I can't see a channel. Maybe it's here. All right, so here's the channel. A bear flag is a region of buying and selling that trends up in an otherwise downward formation. And so if you were a person that said, hey, I want to buy this dip because this is a bear flag and I don't know that it's broken yet, you could buy this edge where support is, where it's starting to bounce right now. But the goal would be, unless you were going to grasshopper it, as Deanna often says, the goal would be, can you hold it from 23,213 up to 23,223? That would be what you would look at, right? To see if that zone works. I think it's going to flush and then bounce, right? What we do know is there's a lot of aggressive buying on the dips into these formations, but I'm looking for this line to break down and then recapture so that I can get it. Now, how do we use the implied volatility lines? So another way to use these implied vol lines is to wait for price action to fall into the space and then watch them recover around the line. Now, you could take some quick snap trades here, right? Up, down, moves all over the place. But how it resolves is going to be the direction of your trade, right? So if it resolves to the north, you go back up into the frame. If it resolves to the south, you walk down into the next volatility line. But these lines are going to be really important through the week. You're going to see price action come into them and do what they do, which is usually have a fight club there before it resolves. All right, let's take a look at the YM. See if there's anything cooking there. My suspicion is that the YM is the one instrument that is showing a breakdown formation. So last week's expected move was the high here and the low here. Never really went to the high because this is Sunday, Friday, Thursday, Wednesday, Tuesday, Monday. So it never got up to the weekly high expected last week, and it broke the expected move on Tuesday and then recovered on Wednesday. So you can see this reflexive action telling you what happens at these volatility areas. Right now, they are battling, but if I were a gambling man, I would say that this is the chart that is telling me I've got more downside moves ahead in the broad market from this formation, because I have a high, I have a lower high, and then I have another lower high. And I've had a very big dip, of course, right, that has run straight up. I mean, I could move back into all of this heavy congestion very easily. My thought is that's what's likely to go on with this chart. So let's take a look at oil. This one's been very interesting. We've got a little bit of a bounce action going today. Let's stare down. Let's go to the hourly chart and look for the highest volume frame for us here. We had, whoa, look at that. That's pretty big, right? So we're going to anchor the VWAP there in this area. And what we can see is the top of the VWAP currently, of the anchored VWAP, is resistance. So notice, ooh, this is perfect. Here we have 1, 2, 3, 4, 5 hours of price action arguing here. So two things can happen. One, we could have a stop run. Everybody's short here and price action moves here. Now here's what I can see. They sold here, they bought here, and then they sold here again. So for me, I'm going to set up a sell order right at this edge where everybody seemed to resume selling, and I've got a lower low. I'm waiting for that stop run to come into this area and give me a shorting formation, or I'm going to do a stop sell at $65.92. Why? Why you want to do that, Emery? Well, one, huge selling candle. Two, underneath the primary VWAP. Three, underneath the anchored VWAP. Four, momentum really very low, so it could be sideways into the space. And once it sells here, I'll really look for a quick strike price to buy at the last area of resistance. Right? So that's what I want. I want a buy order at the old area of resistance, thinking it's going to hold. Quick strike trades here because I do not know what the price action is going to resolve into. And so this would be my first setup, looking at prior information for the new information in the space. I know that energy has been sold off last week, but it is on the rise. I just expect it to come back into rotation. And so what does that rotation look like? There's a pretty good bit of volatility sitting here in these charts, but you can see this is a mosh pit. So this brings me back to my beginning comment that says, listen, as intraday traders, because we want to get in and execute in the middle of the day, these orders where big money moves in and big money moves out, they're going to be visible on daily candlesticks, right? The 4-hour candlesticks, just bigger candlesticks. And you can see, hey, listen, they are absolutely selling with a fair bit of strength. They're absolutely selling the high around 68.50, and they are buying the low, since this formation of accumulation here, they are buying the low at around 64.11. If we use a daily VWAP, right, this is the Iran event, and so let's slide this over. If we do this, we have a floor sitting here. Okay, that feels weird. No, let's get this anchored VWAP. That feels like a weird calculation. Close. All right. Yeah, that's a big difference. All right, let's put both of those in there. All right, so we can see price trapped in between that range. That's pretty important. That's pretty important. I like it. I even like my trades. I even like my trades better now looking at the daily chart because I can see where the selling pressure is really sitting in this space. And if I sell here and it breaks through that edge, it's going to run into the high of that volatility event in my mind. So that's what I'm staring down right there. I feel pretty comfortable looking at that, thinking it's going to do what it is that I think it's going to do. Let's look at gold. I did not have, it takes me hours to plot these lines because I have to do the calculations, put them over, label every chart. I did not get to do it for gold before we got together. So let's have a peek at gold together. And then what I want you to do is put up how do you get the implied volatility? Brady, you're a guy that looks like you need a hug. I'm just saying. I don't use trend lines. I just said that. But in any case, yes, thank you, Andrew. I appreciate you answering that. The option chains give you volatility. Andrew, you are the absolute best. I just want to tell you. The option chains give us price action that we want to see. And so we'll measure them from any full brokerage platform. You're able to see how the traders are positioning before price action starts. But let's talk about gold, right? Gold here is very sideways. If you were to flip a coin without risk, right? Let's say you had no risk threshold whatsoever, and you flipped a coin and went long here or short here, you would make money just holding on for a few points. And what that tells us is that price action is very constrained. And when price action is constrained like this, risk gets expanded. Now you might think, wait, if price action is constrained, then my trade is constrained. So maybe my risk will be constrained, but it's not. When price action compresses, the likelihood of a gigantic wick that moves to the upside or the downside becomes very much more likely. So what's the thought process here? If I look at this chart and I go up and down and up and down and up and down and up and up and down and down and up and up and down, I don't have a pattern here. And if you're trading trend, this is not the instrument to trade trend right now. It is just not in a very solid space. And so if you're staring down an instrument and you're saying, wow, does this have price action strength for me in a space where I could trade trend, you're looking at something that needs to tell you you have trend. So for instance, you can look at something and you can say, wait a second, I see old resistance. Here's a wick that becomes new support. So if it holds here and then it breaks out, I have old resistance that becomes support, breaks into the wick. See that right there? Breaks into the wick, but steady. You can trade this formation because it's generally steady. Now you're looking at a breakout of sideways action all the way to the top, and now it's breaking through this guy right here, right? Literally, it comes halfway down into that area, hits the old resistance zone, and then becomes support. So right now, we're in a really choppy space. The ideal spaces to buy, in my mind, I love working with gold, are at the edges of the formation, but with a tight stop, right? So the great thing about Topstep is if you have a buy and it initiates, it's in the middle of the night, whatever, right? You have a buy there and you put a stop market sell, it will jump in front of where your bracket orders sit. And so you won't be sitting for a drawdown that's XYZ until after your triggers get set up. So it will clear everything off of the board once that initial buy gets done and you end up being flat. There's nothing to execute. So that's how you get around. Somebody asked this question last time. They said, hey, how do I trade putting my stops in before things get triggered? That's exactly how you would do that. And so I would do the same thing up here, because actually, you know what? I would do it halfway up here. 63.05. And then my stop buy to get me out of there is a few points higher, right? So that's what I would like to do. Now, why not sell here? Well, because I've got upward pressure here and this big wick, it's almost worth it to wait until that wick is tested. So I think I'll shift that there. All right. So let's talk about what we might want to trade. Give me, folks, my favorite thing to do. Some of my kids came and visited me this weekend. And of course, all I want to do is talk about the market because I love the market. And so I'm always yapping with them about the market. And so my goal is to answer questions that are as useful as possible. And so what I want to do is ask you, oh yes, trend lines, yes. I can't trade them. I only understand price moving in a horizontal line. I'm terrible at trading those. I don't like them, and I just don't. So let me go to an hourly chart here and anchor a VWAP that's close. Wow, there's nothing besides this one. Yeah, looks awful. All right, let's go back to the ES and see what we're doing. Trapped. Now, here's another thing. Traders will sit around and wait for a trade, and they'll say, oh my gosh, I've been staring at this forever. I'm just going to get in. I want to tell you that kind of boredom event that makes you just pull the trigger is a death knell. The goal of moving from Combine to XFA to live is to move with purpose. And so you've got to be purposeful about what you're doing. It's not, hey, I think it's going to go up here, right? Otherwise, you're not going to have a rhythm and a structure and a process that you can repeat every time, or that you can go back and review and go, hey, I need to take a look at this, right? So that's super important. All right. So thank you, Lenny. I appreciate that. Let's see what we've got. 105 lot at 220. That's a pretty big one, right? That's a pretty big one. Let me open that. Let me open my platform here. On the NQ, I want to trade the NQ module. Oh, we need to look at Bitcoin. That's what I forgot to do. Let's look at Bitcoin, folks. So I heard something absolutely dramatic. Some guy that owns like 18,000 Bitcoin, liquidated on Friday. I think, I don't know how many billions he made. I think it's like 9 or 13 billion or some crazy freaking number. It's just bananas. So the question is, people were giving him a hard time because, he'd held it for a long time. He bought it at 25,000 and now he's liquidated all of this Bitcoin. The question is it going to have repercussions in the broad structure of the market? And so we can see that the IV for Monday is wider in the first pass. And so let's go to the hourly. We're caught between two VWAPs. A lot of buyers down here. You can see the buyers coming in with these wicks. What do we expect here? Let me think about this. All right, let's look at a 4-hour. Let's see if we can isolate where the buyers and sellers are. Obviously, nobody wants to buy above 20,200 at this juncture, right? And they wanted to here, but at about 121,000, they said, no, I'm done. So we know we've got overhead supply here. Supply forces or puts a ceiling on price, right? Because the more things you have, let's turn it into a market space. If supply diminishes in terms of who's ready to sell up there, so we're looking for areas that people have inventory. If that gets small, price will accelerate to try and shift over into a brand new place where there are tons of buyers and they're looking for the next place to sell. But if you've got an anchor point, like you can see here for these 12 hours, it means that the buyer said, I'm not paying any more than 121,000 for that. I'm not doing it. And the seller said, okay, if you won't buy it for 121,000, maybe I can get you to buy it for 120,000. So they'll drop their price to facilitate that trade. And the more trade activity goes there, they go, okay, let me see if I can sell it for more. But those guys that are selling in general are the ones that will buy here or buy here, right? Those are the guys taking profit. At this juncture, we've got all of these buyers sitting at around 116,000. Now, I've been waiting at 115,000 for a buy zone, for, I don't know, 3 weeks. I don't know if I'm going to get it or not, but I do have a suspicion that if we lose 116,000, I will get more selling on the horizon. So I'm going to sell it if it gets lower than that, and I'm going to cover it at the gap fill. Right? I'm trading the gap, comes down into the break of support, fills the region. That's all she wrote. If I'm up here, I've got higher highs, but also another high there. So I don't really have any area up here that tells me that folks are selling, except for right at the top. That's the place that tells me, hey, if they don't sell here, they're going to break out and move to the next area. So my thought is I can use quite a bit of room right there. My thought is I'm going to wait. I'm going to leave these trades as overnight. We'll be able to see how they work in the morning, and I will do a stop buy here to cover. I'll probably add to this position a little bit later because you can buy a lot of micro Bitcoin and get yourself a pretty nice trade. So that being said, that's what we're staring down. Markets aren't moving very dramatically at this juncture. They're sitting around, potentially heading higher. But again, in this area, if I'm looking at a 15-minute chart, I can easily say, oh, buyers, buyers, sellers, maybe sellers. Except this VWAP is telling me that this entire range of motion is where the price action is likely to sit. So knowing that, I'm going to put a sell order up here. And I'm going to put the stop right there. And we're going to see how that goes. Yes, could I take a trade in between here and chase it up for a couple of ticks or whatever? I could do that, but I mean, what is the point of trading? The point of trading is getting into a spot where there's good value and good opportunity, and the trade will run with you instead of going, you know, I'm just going to try and get whatever. I mean, I think even though we're intraday trading, folks, our focus needs to be on what the heck is going on. What's going on? And for a day and a half, we had buyers buy down here at 63.26, and we had them sell up here at 63.56, and in the middle, we did both. So what are you doing getting in there? It literally is a coin toss. Why are you saying that, Emery? Because half the buyers are down here and half the sellers are up here. It's literally a coin toss. And so if you're looking at a coin toss, how about going to the edges of those big ranges showing and position there? And if you say to yourself, well, I want to be active, go to your practice account, pop it open, and trade your heart out, thinking that you think, hey, I'm going to go from here to here or this to that or whatever. That's what a practice account is for. It's to design, develop, and improve your process and strategy. Right? Okay. Let's see what we're all chit-chatting about. %of your contracts, 80%. The price pushed to 123, liquidated, and then immediately turned around. I have 550K XFAs that I'm running until I can get my buffer for live. That's great. Just plan for the win, right? Weekly spot bid is supposed to close an ugly bearish doji. What is the red line titled IV Monday? So when I first began chit-chatting with us, I mentioned that I went to the Implied Volatility event on my one of my other trading platforms where I trade live in a brokerage. And so what that gives me is if you go to the option chains, you can pick the price of its, whatever the ES is right this minute. And you can stare it down and you can say, okay, Monday, they are pricing in a volatility of 43%. And then they calculate that into a real dollar move, right? It's a physical dollar move. So IV Monday at 63.5625 says that sellers are likely positioning at 6,356, where the IV Monday high is, and buyers are likely positioned at 6,314. But the real question is this: what do you mean buyers are positioned there? I'm looking on the dome. I don't see buyers and sellers there. That is the predictive nature of the option chain. So really, the way we get that is Friday, just before the close, the traders say to themselves, I'm going to sell the calls in the ES at 63.56, and I'm going to sell the puts in the ES at 63.14. And I'm going to let all of that theta decay pull out during the day. And if all I do is sit inside of this big range, I've made the money of collecting a premium off of the sold call above and the sold put below. That's really what the chains do. They tell us statistically where price is supposed to sit. Now, as we move forward, you're going to see that sometimes price action will be so big that we could either blow down into Thursday's volatility line or up into Friday's volatility line. Literally, anything can happen. What we have to look at is the trader and how they are positioning themselves, right? And so the key thing to look at is if you have been running the cycle of combine, win a little, win a little, win a little, lose a bunch, win a little, lose a bunch, and then get eliminated because as you've been winning, your minimum daily requirement increases, but you're still losing the same amount. So you get stopped out, and then you're no longer eligible, and you got to start with a brand new combine. The question that every trader should answer for themselves is the following: what am I doing this week that last week caused me problems, but I'm still doing it this week? Or what did I do last week that caused me problems that I'm not going to do this week? And a lot of times we stare things down and we go, listen, I saw it move. It was higher low, higher high, higher low, higher high. I just knew it was going to break out to the north. A lot of times we're playing inside a range and we don't even realize it. So many traders I talk to, I go, what time frame are you trading? And they go, 3 minute. I'm like, how can you tell what a chart's direction is by staring down a 3 minute event? How do you know? Well, Emery, obviously you can see they're making higher lows. That's how you know. I get that. But how do you know where you're definitively going to say, this is my support, this is my resistance, this is the true risk that I'm sitting with? A lot of times we'll go, hey, I'm going to let old resistance be new support, and I'm just going to trade it up, and I'm trading the 3 minute. Well, this 3 minute formation actually tells us that support is way down here, almost 8 points away, right? Over 8 points away. Because that's the last place the 3 minute participants came in and said, I'm going to collect inventory, right? And a lot of times we get washed out and we sort of, I don't know, we blame whatever. We blame a news tweet. We blame whatever. We blame anything, right? Other than, wait a second, did I actually look at what price action is trying to do in the current environment? What's it trying to do? Obviously, it's trying to get up over this resistance, but how do we know it's going to? We don't. We have no idea if it's going to. So if you take a buy here and you go, no, it's going up here, your risk has got to be the floor of support. It's got to be. Because that's what they're telling you. Hey, listen, this is where I'm accumulating inventory at the base of this formation. I'm selling it up here sometimes. I'm buying it other times. Now, if you go, hey, I think it's going down. Look, high, low, lower high, lower low, lower high, lower low. I'm going to sell this area right here. It's losing the VWAP. Great. What's your risk? It's the top of this range. Because if you're staring down this formation, that's the actual risk event that the traders who are accumulating inventory to distribute at a profit or end up liquidating at a discount, those are the ranges they're looking at. And so the big takeaway for today's chit chat in Market Kickoff, just before we get to hop into Dakota's stuff in just a little bit, is the following. In general, intraday traders, we participate inside of very noisy bits. And so if we're participating inside of noisy bits, how do we protect ourselves against bigger drawdowns? Two things. We can become very effective scalpers, which I want to tell you is extremely difficult. To become a very effective scalper is very difficult. Or we widen the range and we look at where key actions move the chart in a certain direction. And so over here, we can look and we can go, hey, I see a bunch of wicks here, but after that, they just took off. And then they broke out, old resistance became new support. They're sitting right here on the edge. So I can see them moving and trying to continue to either acquire more inventory or sell into these higher zones. At which point, bigger traders on wider time frames are staring down the big picture and saying, I bet we're in a range. And easily they can go, if we're in a range, I'm going to take the failed retest. Here's my top, so I'm waiting for the failed retest. Then I'm going to try to short into all of these wicks, right? Now, obviously there was a buyer here. They came in, tested the VWAP, came down, moved a lot of inventory here. Last time they held inventory here, they distributed it at along and higher. So my estimation is this time they're going to do the same thing. So again, you could go, Anne-Marie, then why don't you go long? Because risk is way down here, right? Almost over 20 points, over 10 points away, right? Well below. And I don't want to do that. I don't want to risk 10 points on a trade. Well, you could stop it right there at, yeah, but I also don't want to have death by 1,000 cuts, right? You know what I mean? How can I have this information on implied volatility, please? Okay. One, you have to have a full brokerage account that gives you option chains. If you have that, you can go to the option chains and you can plug in ES, NQ, YM, whatever you want. And you're going to see the chains available for those options. It's going to say Monday is going to have, let me see if I still have that up. Yeah. Let's take a peek. So for the ES, Monday, from the opening tick, it tells us we've got about 27 points of motion in either direction. So we look at the opening tick, we had 27 points to the north, we subtract 27 points from the open, and then we've got ourselves our range, right, for Monday. But here's the great thing. If you want a volatility expression for any chart on any day, go to Coach Anne Marie in Topstep on the Discord and just say, hey, Anne Marie, may I have the XYZ chains, please, for tomorrow, for Wednesday, for whatever, right? But if you have a full brokerage, you can do it yourself by just going to the options chains and getting it like that. I hope that answers that. Yeah. How many of us die death by 1,000 cuts trading combines? Little bit up, little bit down, great big down. A lot up, little bit up, a lot down. And it's because we are not framing out, wait a second, we could have a wick here, and it could be dastardly. It could be a dastardly wick. So if you're staring down price action, look at the response at these edges and see what the traders are doing, right? Now, if you're a scalp trader, so I love JJ. He's a great guy. He's VWAP Trader 1. Great guy. He looks at the 1 minute. But before he does that, he measures out the ranges in price action. And so what he will do is say, all right, let's see who catches a bid above here. And let's see if they hold it. But for me, because I know all my weaknesses. I'm not quick on the trigger. I've got a brain that runs like Fred Flintstone, right? And the wheels in my brain are made of concrete. They're made of stone. And so they go slow. I can't trade these 1 minutes. If you guys can trade a 1 minute, good on you. But it's about managing risk. The only difference between you and the next person, no matter how advanced they are, how much they know, how many they can pick, is how they manage risk. That's the only difference. You can read a chart really well. You can know all kinds of indicators. You can have just pure wizardry in your mind. But if you don't know how to manage risk day to day, moment by moment, you're going to blow up your account. So how do you manage risk? People would go, well, I just use 10-point stop. What if the market's telling you it's got 25 points in the move? Hey, all our candles are moving 25 points. You want to talk about death by 1,000 cuts? You're going to die. Death by 1,000 cuts. So the question then becomes, well, how do I prepare for a region where I understand where the risk is, that it's defined, and I'll use a term that KJ and I talked Friday, and he's #1 on the leaderboard, and he said something, he used the term asymmetric exposure. And that's where your risk is the smallest it can be. And so you're able to lever up and move continuing with a trade because it's got upward motion, not just finding yourself caught in this big nasty patch of garbage for 3 hours of the day, right? How many times does this happen to us? Oh no, I got to trade. Okay, this is it. It's moving out. This is going higher. And it wicks and wicks and wicks and wicks and runs our stop. over and over again until we're exhausted, and then the move happens. So how do we circumvent that? We don't exhaust ourselves prior to the real move. We watch for them. And when they begin, we become first adopters in the process, right? The people who are on the cutting edge of movements, cutting edge is actually a great term because you're going to get cut, right? I mean, how many people have we seen invent incredible things, but just aren't smart enough to take it to the next level? My favorite example of this is the company Kodak. They invented the first digital camera, invented it. And they sat around in the boardroom and said, you know, people are not going to want to have phones or devices where they can keep their pictures on it. And besides, it's going to cannibalize our print business. And they ditched the whole thing and, you know, Kodak who, right? You've just got to go. That's what happens to first adopters who don't think through things properly. And that's what happens to us when we go, oh my gosh, I got to catch this move. This is it. I'm positive it's it. Let price action tell you. And just, if you want to look at it in really simple terms, and you say, hey, I want to use a 30-minute chart to understand motion. Number one, go to your practice account. Don't be Chichi Rodriguez, right? I know some of us are like, who the heck is that? He's a great golfer of days past. But his claim to fame was he never took a practice shot. Never. And he always said, why waste a swing? Never took a practice swing ever. And his thought was, why waste a swing? And my commentary is, you waste the swing so that you can understand what's going on with trend. And so very simply, you spread it out and you go, that looks pretty upside. Where's it going? Look at the range of this candlestick right here. See this? That's where they're going. That's where they're going. Now, could they break above that? Yes, absolutely. But if you're trading a 30-minute and you're saying, ooh, that's a potential trade I can take, you literally can go, all right, I'll take it. If it doesn't, I have heavy congestion, 4.5 points to the north. Can I take a 4.5 point stop? Right? What is that? 50, 200, 250 bucks. I can do that. One trade, one time. What am I trading? I'm trading the fact that we're in downward formations. We're climbing up this 30-minute candlestick. And when we get there, there are going to be sellers there. That's the anticipation. We wait for it. We let it hit, comes back, great. If it doesn't, we get stopped out of the trade. Easy breezy. That's really it. But if you are compressed and looking at these little tight moving averages, holy cow, did you guys hear that thunder? It is going to storm something crazy. Great part about living on the water. Also a little bit scary sometimes. But anyways, so that's it. I have rambled on a lot. Oh, Dee. Hi. Love Dee. She's the best. She really is. I have learned a lot from her. Very systematic, organized trader. I've learned so much from her. I just thank you so much for being here. Okay, so any other questions, pirate style? In case she doesn't see this, she puts out an amazing money ball. Oh, thank you so much. Thank you. I appreciate that. Hey, Mo! Thank you so much. I'm so glad you guys are here. Could you please clarify how to set up volume by price and super trend on the charts? Okay, that'll be the last thing I'll do for us. So I don't know why this is not propagating. Okay, let's do volume profile. There we go. All right, so here's volume by price. And let's have a look at it. VR, inputs, row size. I want a lot of rows so I can see what's going on. So I'll choose maybe 50. Or maybe 60. Yeah. Value area, that's going to be the highlighted event. Volume point of control is right down here, right? That's 63.30. A lot of traders have come in there. A lot of times we'll go, hey, I want to trade there. But although that is where they've been trading, the important thing to look and say is, well, if I traded there, what kind of risk am I going to bump into? What does risk look like right here? And so you can see it's pretty wide. So give yourself some time and some range, but that's how you would look at that. Rows layout. Do we want ticks per row? No. Numbers of rows. All right. So that's how you would look at volume by price, right? And then the next one of super trend. This is the one I use, right? Oops, that's a fib. I use 6 and 2. Now, full disclosure, the folks who use this signal most often, the default is a factor of 3 and a length of 10. And that's what they use, right? Now, here's what I like to do. If you're saying, well, my lines don't look like that. When I go to style, I really like step lines with diamonds. Big fan. And then I have one color upside, one color showing rising support, one color showing lower resistance. If you want the arrow, that's great. You can see them. They're very tiny, you know, above bar, below bar, but that's how you would look at them. And then this tells you which chart you want to see. Let's say you only want to see it on the 30-minute chart. So you go 30. Right? And then you take everything else off. If you just say, show it to me like that. So if I go to a 15-minute, it'll disappear, right? You can only see it on 30-minute. If it gets you confused, you can show it to anyone. I mean, it'll be any of those spaces, right? So last minute questions. You know what? I love you guys too. Thanks for spending time with me. Trading is hard. It's only hard because of the mental game. And we just try to get involved where the rhythm's totally off. It's sort of like surfing. We just catch the wave at the wrong time because we can't feel the swell. Or sailing, or being in a Hobie Cat, which I love my Hobie Cat. I love it. But you can get yourself caught in a jam if you are not figuring out what you need to do with those sails. And the way to understand how the wind is shifting people in the market, you've got to zoom out and go, okay, where's the least risk showing up for me? I don't know what the market's going to do, ever. I don't know. But the least risk is where I'm going to try to position myself for the greatest reward, because I have lost a lot of money trading, and I don't want to do that anymore. So years ago, I said, how do I stop doing that? And I put a plan in place, and it's the one that I stick to. You just have to say, I'm not moving until my risk is showing. And, sometimes that makes for boring TV, but it's a fact. You trade to make money, not to be active. Go do that on your practice account. And then you can see how to blow things up, right? That's going to be super easy. Okay. Thank you, everybody. Oh, yes, absolutely. Absolutely. There are many parallels to surfing and trading. I can't walk and chew gum at the same time, so I'm pretty good behind my desk. But when I do get into that rhythm and flow in the water, because I love the water, it's a beautiful thing to catch a wave. And then there's balance and your ability to move and connect with the flow of markets becomes hopefully something that's second nature. And so, super excited for VIP coming, super excited for Dakota coming on next. And I just want to say thank you, everybody, for joining me. Thank you, Andrew. You're a gem, a pure sweetheart, always taking care of us behind the scenes. And for my lovely Topstep family who popped in to say hi. I think you guys are the best. We just have such a tremendous team here. I love being part of everything. All right, if you trade tonight, watch your risk. And if you want to see how it might move, use your practice account. Don't blow up a combine simply because you're trying to figure out how to trade. That's what practice is for, right? Take care, everybody. Bye.